that the challenge we face at the moment in thinking about how we respond to the lessons of the financial crisis is how do you ensure there's consistency in regulatory reform in the UK, in Europe, and the US, but also to ensure that that regulatory reform is consistent not just with promoting more resilient and stable financial markets, but also more stable and resilient economic growth. You know, we know from our own example here in the UK that the financial crisis of 2008-2009 led to the longest and deepest recession since before the war. That still has an impact upon our economic condition, and what we're seeking to do in our reform programme is to ensure that reforms are proportionate. They identify the real challenges around building financial stability and resilience, but they also do promote long-term stable economic growth. And I think that if I think about that in the context of Europe and the US, I think one of the challenges is that Europe and the US are moving at different speeds in terms of the implementation of the G20 commitments. The Dodd-Frank bill is meant to be fully implemented, or the rules written by July this year. That's a great challenge, but that's a deadline. We in Europe are some way off that. You know, we'll hopefully have reached general political agreement on EMIR by July, but the level 2, the detailed rules, will not be ready for some time. So there's a difference in pace and implementation. I also think that there is a challenge that particularly affects the UK. If you look at the US, there's a strong domestic banking and financial services sector. So in the sense that the US know their market is there. For the UK, half our banking assets come from outside the UK. You know, the UK is a global financial centre and is dependent upon businesses from outside the UK basing their headquarters here. It used to be the case, I'm not sure it still is, that there are more German banks here in London than there are in Frankfurt, which is a sort of sign of Europe's international nature. So I think we need to make sure in the UK that our reforms are consistent with maintaining London's global financial centre. That's one of the reasons why we are reforming financial regulation through reform of the structure and style of regulation in London, replacing the FSA with the FPC, the PRA and the FCA. But it's also important, I think, for us in London that we get the European regulatory framework right as well. And one of the priorities of this government is to be fully engaged in the debate in Europe. Europe will increasingly design the framework that will affect wholesale financial markets, and we need to make sure in designing that framework that we promote stability and economic growth. And that's why I think it's important to ensure that reforms are rooted in analysis, on evidence, that we don't move on political whim, but we move where there's sound reasons to do so to bring about stability. We must make sure, I think, that we maintain the single market and strengthen the single market through regulatory reform. Some surveys that demonstrate that MiFID contributes 0.5% to European GDP. So it does demonstrate, actually, creating a single market in financial services can help the whole of Europe. So we need to make sure that our regulation is proportionate, promotes the single market, but also in terms of removing barriers within Europe, we don't create barriers between Europe and the US and other key trading partners. And we saw this on AIFMD, where there were plans that would restrict access by third country funds and managers to European markets. I think that would have been detrimental to the strength of UK and European financial services. We fought back that challenge, and we secured international agreement to ensure there was a passport. In MiFID II, there's potential for us to shoot ourselves in the foot by requiring strict equivalence on people trading and providing finance into the EU. At a time when Europe needs capital, we shouldn't be erecting barriers that stops capital flowing into the EU, particularly given that last year 27% of the investment in EU cross-border securities came from outside the EU. So I'd say is that yes, we need to make sure there's financial reform. Yes, there's some challenges about coordination between the EU and Europe, EU and the US. But what we need to do is to make sure those reforms are rooted in evidence and help promote and strengthen economic growth at the same time as we promote resilience and stability in financial markets.